This is a special podcast presentation from 700WLW.com. This is Casey Boland on Demand.
Casey Boland, the world of money. The economy is improving, as we know. Now you have investors who are kind of wondering if the Fed decides it's time to begin raising interest rates, what happens to the market? And you have taken a look at this historically, so basically what'd you find?
Well, there have been 14 instances since the late 1950s when the Fed started to raise rates, and it's understandable that people are concerned about because they automatically assume that the market will go in the tank when the Fed starts to raise rates, because from a textbook standpoint, yes, rising rates increases the cost of borrowing, which can weigh on the economy a bit, but in fact, 12 out of 14 times, the stock market has actually had positive performance during that stretch. It's actually averaged right around the long-term average of 10%.
Well, you can't really complain about 10%. Now, does that hold up after the fact, or what happens when the Fed stops raising rates?
Well, yes, the story changes a bit after that point in time. When you look at 1 year from when the Fed quit raising rates, stocks average about 7.6%, which isn't too bad. It's interesting. There's been some instances where when rates peaked, it happened right before the 87 Black Monday crash at the beginning of 2000, the 2002 bear market, and recently, 07, that rate hike ended just before things started to get pretty interesting.
Well, I guess it could be sort of a chicken and egg question, and that is there an event that caused the Fed to stop raising the rates that precipitated the drop, or was it the stoppage of the raising of the rates?
It could be, and there could be an instance where the Fed has to stop raising rates because of some type of shock or something that happens to the economy. Generally speaking, when the Fed stops raising rates, the economy may be doing okay, but historically speaking, the Fed usually late to start raising rates, and they're late to stop raising rates, and the economy already starts to feel the impact. But, the assumption that stocks are going to get killed when the Fed starts to increase rates, the historical record just doesn't back up that argument. It's never going to be that easy.
All right, Casey Boland, thanks so much. We're looking at 8:54 in the morning, and worth checking out on the blog. Got a few things out there. Got a lot of things out there. Yesterday I had the list of fast food chains that have either gone by the wayside or almost gone by the wayside. They're on there paired with some classic TV commercials to compare. There is the raccoon that rides the gator. Everybody needs to see that. And maybe the worst dive of all time. This is international diving competition, which we usually see every 4 years when the Olympics roll around. But they had their Southeast Asian Games, and this one Filipino diver got a 0.0 on his dive. And his teammate didn't do much better. They're up there to kind of wince as you watch, but they're there for you all on my page at 700WLW.com.